Imagine a currency so powerful it touches every corner of the globe. A single piece of paper, or a few keystrokes on a screen, can dictate the fate of nations, determine who prospers and who struggles. Oil, gold, food, even life-saving medicine, almost everything you trade, buy, or sell is priced in it. It is invisible yet unstoppable. It is trusted yet feared. It is the US dollar. For decades, it has ruled global trade, quietly shaping politics, economies, and even wars. But power always comes with consequences. Every rise casts a shadow, every smile hides a risk. Today, we uncover the hidden power of the dollar, how it controls the world, influences nations, and even threatens the economy it was born to protect. This is the story of the currency that runs the world and the double-edged sword behind its strength. In the shadowy corridors of global finance, one currency reigns supreme, the US dollar. It is invisible yet omnipresent, silent yet powerful, shaping the fate of nations with every rise and fall in its value. To most, it is just paper, numbers on a screen, a medium of exchange. But for the world, it is far more, a symbol of control, trust, and vulnerability. In 2019, nearly 88% of all international transactions were conducted in US dollars. No other currency even came close. Oil, gold, coffee, wheat, almost every commodity that fuels the engines of global economies is priced in dollars. It is a force that America wields effortlessly, sometimes consciously, often simply by virtue of history. But how did we get here? How did a single currency created in a young republic centuries ago come to dominate global trade? The answer lies in the ashes of World War II, in a time when the world was rebuilding from devastation, when economies were fragile, and when America emerged as the undisputed economic powerhouse. The year was 1944. Delegates from 44 nations gathered in Bretton Woods, New Hampshire, to design a new global financial system. Their mission was simple yet profound: create stability in a fractured world. The solution they chose was to peg their currencies to the US dollar, which itself was backed by gold. It was a bold statement. America would become the anchor of global finance, and the dollar, the bedrock of international trade. As economies recovered and trade flourished, the dollar's dominance solidified. Even when President Nixon ended the gold standard in 1971, the world's dependence on the dollar persisted. It was no longer about gold, it was about trust, liquidity, and ease. The dollar had become the world's default currency, the invisible thread tying nations together. And yet, this immense power carries its own shadows. For every advantage the US gains, there are consequences. Unintended, sometimes subtle, sometimes catastrophic. A strong dollar makes imports cheaper, but exports less competitive. It strengthens the global position of the United States, but it also creates vulnerabilities, tensions and rivalries that ripple through every corner of the world. In the following chapters, we will uncover how the dollar rules, how it shapes geopolitics, how it smiles and frowns like a living entity, and how even the mightiest currency is not immune to the currents of history, ambition, and human desire. The story of the dollar's rise is inseparable from the ruins of World War II. Europe lay in devastation, cities reduced to rubble, economies shattered, populations struggling to survive. Japan, Germany, France, and Italy faced the monumental task of rebuilding from nothing. In stark contrast, the United States emerged largely unscathed. Its factories were intact, its industries thriving, and its economic output unmatched anywhere in the world. The Bretton Woods Conference of 1944 became the stage for America to cement its financial dominance. 44 nations agreed to peg their currencies to the US dollar. In turn, the dollar was pegged to gold at $35 an ounce, a promise of stability in a turbulent world. Suddenly, the dollar was no longer just a national currency. It was the backbone of global trade. This system created unprecedented influence. Countries reliant on the dollar were now, to some extent, tethered to the United States. Trade agreements, financial flows, and even political alliances were increasingly shaped by America's monetary choices. The world had, almost unknowingly, surrendered a quiet but extraordinary power to one nation. Even after 1971, when the United States abandoned the gold standard, the dollar did not falter. Trust had already been built. Nations were accustomed to trading in dollars, and the U.S. banking system, efficient, liquid, and reliable, made transactions seamless. The dollar became the default language of global commerce. To understand the dollar's true power, we must look at the mechanics of international trade. Imagine a Canadian lumber company selling boards to a French construction firm. The transaction passes through a series of correspondent banks in the United States. Each step of the way, the money flows into accounts tied to the Federal Reserve. Every dollar transferred technically touches U.S. soil, giving America unprecedented legal oversight over the global financial system. This seemingly invisible network gives the United States the ability to influence global trade far beyond its borders. Sanctions, regulatory enforcement, and anti-corruption measures are not just abstract policies. They are tools backed by the dollar AS omnipresence. After 9/11, this power became strategic. By monitoring dollar transactions worldwide, the U.S. sought to choke funding to terrorist networks. Banks across continents became unwilling participants in enforcing American foreign policy. The dollar was no longer just money. It was a weapon, a lever, a silent authority that could dictate the behavior of nations. But dominance breeds resistance. Countries that find themselves constrained by dollar-based trade have sought alternatives. The European Union, for instance, opposed U.S. sanctions against Iran following America's withdrawal from the nuclear deal in 2018. These sanctions restricted dollar transactions, essentially cutting Iran off from international markets. In response, the EU began developing a euro-based payment system to facilitate trade without relying on dollars. India, too, created alternative channels, allowing transactions with sanctioned nations. These systems are small, but they are significant. They signal a slow erosion of the dollar's unquestioned supremacy. While the U.S. continues to wield its monetary influence, the cracks are forming. America's rivals are exploring new pathways, and the dollar's dominance, once considered untouchable, now faces subtle challenges. The dollar is unique. Its strength is both celebrated and feared. Economists call its behavior the dollar smile, a theory explaining how the currency thrives in two extremes. When the U.S. economy is booming, investors flock to the dollar, seeking returns in a strong, growing market. When global turmoil strikes, recessions, wars, or financial crises, the dollar again becomes a haven, a safe asset in uncertain times. Yet this strength has consequences. For emerging markets, a stronger dollar means weaker local currencies, rising import costs, and exported inflation. For Americans, it makes imports cheaper, travel more affordable, and certain goods more accessible, but it can simultaneously hurt U.S. exporters. Companies that depend on international revenue, like Microsoft or Coca-Cola, find their overseas sales diminished. The dollar smiles, yes, but it also cuts both ways. Its peaks bring benefits, its strength hides hidden dangers, and its fluctuations ripple across the global economy in ways few fully understand. History has repeatedly shown the dollar's ability to act as both lifeline and leash. During the 2008 Great Recession, as economies around the world collapsed, investors fled to the dollar as a secure asset. Banks, corporations, and even governments sought refuge in its stability. It became clear, in moments of fear, the dollar does not merely survive, it dominates. But dominance comes at a price. A surging dollar increases the cost of debt in emerging economies, pushing nations with dollar-denominated loans to the brink. Inflation spikes as imports become more expensive. Social unrest follows in regions far from Washington. The dollar smiles in New York while economies struggle in Jakarta, Buenos Aires, and Cairo. Even today, events like the COVID-19 pandemic, supply chain disruptions, and geopolitical tensions from China to Ukraine amplify the dollar's role. Its power is undeniable, but its influence is double-edged. The U.S. dollar is the world's ultimate enforcement tool. By controlling access to dollars, America can impose sanctions that strangle economies, limit trade, and isolate nations. Iran, North Korea, and Russia have all felt the weight of dollar-based sanctions. Consider this. A nation trying to trade with a sanctioned country finds itself blocked from using dollars. Its businesses face penalties, frozen assets, and restricted access to global markets. The message is clear. Follow U.S. rules or risk economic isolation. This invisible hand is both feared and envied. While some nations comply, others innovate. China's push for the yuan in global trade, the EU's euro-based alternatives, and India's bypass systems all indicate a slow but deliberate shift. The dollar's power is immense, but not unchallenged. A strong dollar seems like a victory. It signals investor confidence, economic resilience, and global trust. Yet, for the U.S., strength carries hidden dangers. Exports become less competitive. American corporations lose overseas sales. Emerging markets face inflation shocks. The paradox is striking. The currency that empowers the United States internationally can simultaneously weaken domestic companies and global stability. Tech giants report declining profits, manufacturing struggles to expand abroad, and the Fed must balance interest rate hikes against the dollar's global consequences. It is a currency that smiles in one moment and frowns the next, a living entity in global finance whose influence is felt in every corner of the world. Even as the dollar dominates, the world adapts. Nations wary of U.S. influence are designing alternatives. The euro, yuan, and digital currencies are all part of an emerging ecosystem challenging dollar supremacy. The European Union's efforts to bypass U.S. sanctions, India's alternative payment systems, and China's growing Belt and Road trade settlements hint at a future with multiple competing financial networks. While these systems are still small compared to the dollar, their existence represents the first cracks in what was once considered an unbreakable hegemony. The question looms, what happens if the dollar's dominance weakens? U.S. control over global trade, foreign policy leverage, and economic influence could diminish, creating uncertainty for the world's most powerful nation. The U.S. dollar is more than a currency. It is a story of power, trust, and global interdependence. From Bretton Woods to modern crises, it has shaped nations, dictated trade, and influenced geopolitics. Its strength is celebrated, its dominance envied, and its volatility feared. Yet the future is not guaranteed. Alternatives are emerging, rival economies are innovating, and the global financial order may slowly diversify. The dollar will continue to smile, but its power is neither absolute nor eternal. For the United States, the challenge is clear: maintain stability at home, navigate a shifting world, and wield its greatest weapon, the dollar, wisely. For the rest of the world, the challenge is to adapt, innovate, and perhaps, one day, speak in a new language of trade. The story of the U.S. dollar is far from over. Its silent dominion continues, shaping lives, nations, and economies in ways both seen and unseen. And as history has shown, the power of a currency is never just about money. It is about influence, control, and the subtle art of shaping the world. The U.S. dollar is more than just a currency. It is the invisible force shaping global trade, the silent power guiding economies, and the unseen hand influencing politics across continents. It has built empires, toppled regimes, and dictated the rules of the world. Yet its strength is not absolute. Rivals rise, alternatives emerge, and the tides of history are never still. As the world slowly adapts, the dollar continues to smile, sometimes bringing prosperity, sometimes sowing disruption. The question remains, how long can one currency hold the world in its grasp? And when its grip loosens, who will rise, who will fall, and what will replace the dominance of the greenback? The story of the dollar is far from over. Its power is silent, its influence profound, and its future uncertain. One thing is clear: in the game of global finance, the dollar is still playing and the world is still watching.